And I'll ask you the question that's now on our minds that Josh posed earlier, which is, can you get disinflation while still seeing a job market that is growing like this?
So that is the big question, and that is why markets have been so topsy-turvy today. We have all thought for the longest time that there was a big trade-off between inflation reduction and the labor market. And what the past year has told us is perhaps there isn't. We have seen jobs grow. We've added 3.2 million payrolls over the last year. The household report has shown an increase of 2.7 million employed Americans, while we've seen a meaningful reduction in inflation. The last three PCE inflation reports that the Fed tracks most closely were very encouraging, with core PCE inflation just above 2%, very, very close to the Fed's target. And this wage growth number, if you zoom in on the last 3 months, it's just 3.4%, perfectly consistent with 2% inflation.
So, Julia, let me ask you this. So this was a blistering report, crushed expectations, but what's your outlook, Julia, for the U.S. labor market from here?
So the official estimates of what's going to happen next don't look so great. If you look at the Congressional Budget Office, if you look at the Fed's SEP, their projections, they all think that unemployment is going to rise. But if you went back a year, that was the case, and they were all proven wrong. The Citibank surprise index has been in record-breaking territory because we've all been getting it wrong for over a year now. And so I think there's tremendous uncertainty. We just don't know. We know that interest rates are holding back many families from buying that new home they would love to buy but cannot afford to buy at these rates. We know that many businesses are putting their investments and their new projects on ice. They come to us and tell us that they really want to hire for new roles, but they're nervous about what the future holds, and so they're holding back right now. How much more would this labor market be growing if it weren't for the restrictive rates that we're seeing? That's, I think, an amazing question to ponder.
That is an amazing question. Well, you work at a place that also has some extra insight into all of these issues, right, at ZipRecruiter. And so I'm wondering what your own internal data is telling you about what's happening with the pace of hiring and any kind of forward-looking indicators.
Sure. So online job postings across the web are just about right back to their pre-pandemic level. And that's consistent with the official data, too, that shows that quits rates, hires, that pretty much all of the key labor market indicators are back to normal, back to a sustainable, healthy, positive place. We also know that the sentiment data has been very weak, and our surveys of job seekers show why. They're feeling unprecedented financial stress. And so while many workers are seeing lots of opportunities, they think those opportunities just aren't enough to help them keep maintain their household spending.